missed the entire move back
Hello
up
and
because
welcome to
they were
Marks Trading.
emotionally
Today we are
fearful.
going to
They weren't
discuss
listening
some
to what
mistakes
the
that
market
beginners
was
make
telling them.
while they start
And I knew plenty of
investing and
traders
trading.
that tried shorting the
predominantly
market
psychological
on
issues,
the way up and didn't listen
emotional issues,
to the
and
data.
not
Again, the data
issues
for
around
us
using some type of
was
technical or fundamental
price
analysis.
series trend following.
So let's get started.
All right.
So during that period, as
All
you
right.
just mentioned,
So
the simplest rules
don't
to follow
want to sit back
avoid initial
and question
failure
why.
for those that are
How?
new to
I
investing.
don't believe this move.
Number one,
Because your
let the market
opinion
speak to you.
is worthless.
Let it
The
guide
market
you.
collectively
Is smarter than every
trade
investor.
what the
market is giving
Take
you. We're going to go
your
into specifically
cue
what I
from
mean
what
by this.
is happening in
Number
the market.
two,
Now, I don't care if you're using
never
some
assume
very
anything.
simple price
Don't
series
force
information
what
like a
you
200-day moving
believe
average that's sloping up. Quite
onto a
frankly,
trade.
I think the 200-day moving average
And then
is
lastly,
worthless to
because
become
everybody else is
successful.
looking at it,
But it will
we are
tell
going
you
to have to fail.
if it's sloping
But
up.
we need to collect
That momentum is
that
building.
failed
Investors are coming back into
information,
the market, and it
or
could
those
give you
failed
some.
trades.
At least
Collect
30,000
it,
foot
analyze it,
overview.
and then build a process around it. How to
All right, so
avoid
the data
those
for fundamental
mistakes.
investors,
So
or at
let's
least
get
a
started.
macro level type of
All
data
right,
point.
so we always
we could
wanna
sit back
look
and
at the
say,
data before
well,
having
now
an
it's very
opinion.
obvious why the market
Because
completely melted
our
up and was
opinions
trading
are
at a
essentially
25 to a 30
worthless
PE in the
without
S&P.
data.
Global liquidity poured
Opinions
into
are
the
guessing.
world's biggest.
So we need as much
stock
data
market
as
being
possible.
the
For
S&P.
us, we are trend
After
followers.
80 trillion
We want to look at
dollars
price series data
of global
If you're
liquidity
a
from
fundamental
central banks poured
event-driven
into trader
world
or
markets.
investor, let that fundamental
So
the
data
market
create
told
a
us all
catalyst for
along
you.
it was
So
smarter than everybody.
we want to let the
and we
market
wanted to
speak
take
to
our
us.
cue
We
from
want
what
it
was
to
happening.
guide
That's
us
why
in
we
terms
like
of
trend
being
followers.
trend followers.
We're
So
just
how do we do that?
following the trend. All right, so here is our proprietary
here's
S&P
the S&P
500 model. It's
almost
measuring
100%
correlation, if
momentum,
not maybe
trend
90%. The Fed's balance
27
to the S&P.
2020 during
Our
the,
opinion
I would say,
on the
peak
market
of
being
the
extremely
fear
expensive during
of
this
Corona
period is worthless.
our model
Because the
basically
market
tapped out
otherwise
at around
said
a
zero
-70.
rates.
Now we're not going to go
and
into
all this
specifics
liquidity.
here.
That's not
It was
important.
pushing
What's
the market
important
higher.
is
Now today we're not going to talk
as
about when should
the
we be getting
overall
out
S&P gains
before
strength in
too
terms of
high
momentum
is too high.
and trend.
But the point
And
is we want to
basically
talk about
peaked
some
out around
high-level
September
emotional
3rd
factors
in terms of that
where we want
optimism
to avoid
of trend and momentum.
not letting the market speak to
We
us.
want to avoid
Okay.
not
Number
listening
two, to what the market
Never
is telling
assume
us.
anything. I saw too
Don't
many
force
traders
what you believe
and
onto a
investors
stock or
not
the market
do well during the melt up.
because you will be wrong.
Now, plenty
we
of
could sit back and
investors
look
sat
at
in
just
cash
two very
and
simple
missed the entire
factors or
move back
data
up
points in
because
terms of
they were
fundamental
emotionally
metrics.
fearful. They
Enterprise
weren't
value
listening
to
to
EBITDA,
what the
which is a
market
good
was
one,
telling
and price
them.
to sales.
And I knew plenty of
Price to
traders
sales I like
that tried
basically
shorting the
telling you if the
market
market's expensive based
on
on
the way up.
how much revenue
and didn't
growth the company
listen
has to
collect the data.
It's
Again, the data
S&P,
for us
and then how expensive,
was
how much
earnings
price does the
series
company have based
trend
on the
following.
company's
All right.
enterprise value. So during that
Here,
period, as we just
2000.
mentioned, last time we saw enterprise value,
don't want to sit
EBITDA
back
valuations
and question
price to
why.
sales valuations was
How?
2000.
I don't believe this
20
move.
years ago.
Because your opinion
Now, we could all have
is
sat back
worthless.
and said
the market collectively
was
is smarter than
extremely
every
expensive.
investor.
Unfortunately, our
Take
opinion
your
and everybody else
cue
looking at the same
from
exact
what
data
is
point
happening in the
was
market. Now, I don't
worthless.
care if you're using some
because
very
the market was
simple
telling you it didn't
price series
care.
information like a 200-day moving average
Don't
that's
assume
sloping up.
the market
Quite
should
frankly,
go
I think
lower
the 200-day moving
because
average
valuations
is
were stretched.
worthless. Don't
because
force
everybody else is looking at it.
a trade,
but it will tell
saying
you
the market should go
if
down.
it's sloping up,
and don't short it because
that momentum
what you
is
believe,
building.
investors are
because
coming
it doesn't
back
matter
into the market
collectively.
and it could
Again,
give you some
the market
at least
as
30,000
a whole
foot
is telling
overview.
you it doesn't care.
All right, so the data
On a stock level,
for fundamental investors,
the market
or at
doesn't
least
care
a
what you
macro
think.
level
Doesn't
type
care
of
that
data
you think a
point.
stock is expensive or cheap. We could
It's
sit back and
going
say to
Well, now it's very obvious why
regardless
the
of
market
what your
completely
opinion
melted up
is.
and was trading at a 25.
In this
to
case,
30
we see
PE
many
on the
different
S&P.
fundamental
global
factors
liquidity
or
poured
metrics
into
on Tesla,
the world's
the
biggest
PE ratio
stock
is
market
trading
being
at
the S&P.
1,000
after 80
from 200
trillion
to
dollars
500
of global liquidity.
Revenue
from
isn't
central banks
significantly
poured
increasing.
into
why the price
world
has
markets.
more than doubled. So the market told us all
The
along
EBITDA,
it was smarter than
which is
everybody,
basically earnings,
and we wanted to take our cue from
has
what
not
was happening.
significantly
That's why we like
moved
trend
at
follow.
all.
We're just
Until
following the trend.
2 to 3 quarters later.
And again,
And
here's the
sales
S&P, really are
almost
not moving.
100%
Either
you're
correlation,
looking at the
if
P,
not maybe
well, the
90
price to sales ratio.
The Fed's balance
It's gone
sheet
from
to the
about
S&P.
9,
Our opinion,
or actually about
on
5,
the market being
up to
extremely
about 15.
expensive during
So
this period,
revenue
is
is
not
worthless
significantly increasing
because
based
the
on the
market's
price either.
otherwise said
But
zero
we
rates
can't force
and all this liquidity,
the trend
pushing the market higher.
in Tesla.
Now
We
today
don't
we're not
want to
going to
fight
talk about
it. Now,
when
if
should
you
we
don't
be
want to
getting
invest
out
it because you don't like the fundamentals,
before
that's fine.
too high
I
is too
understand.
high, but don't try to fight this trend.
But the point is, we
because
want
you
to talk
think
about
that the
some
stock
high level
is
emotional
overvalued.
factors where we want to avoid
Because if
not
you try to
letting
get in the
market
way of it,
speak to
you're
us.
going to get run over. Okay. Number 2.
All right.
Never
And
assume
then lastly,
anything.
don't force
Learn
what
from
you
your
believe
failures.
onto
You
a
have to have
stock
failures
or the
if you're
market.
going to build a better process, because you will be wrong.
Data is king. We
So
could
number
sit back
one,
and look at just two
let's
very simple
look
factors
at our
or
failures,
data points in
collect
terms of
those failures,
fundamental metrics.
Look at the
Enterprise
data
value to EBITDA,
in those,
which is a good one, and
in
price
that
to
set
sales
of failures.
Price to sales, I
And then
like.
number 3,
basically telling you if
we
the
need
market's
to build
expensive
a
based
better
on
process around
how much revenue growth
the
the company has.
data, which was
collectively here,
collected
it's
from
the
the
S&P.
failures.
And then
So let's
how
just say, hey,
expensive, how much
why do we keep
earnings
losing
does
money?
the company have based on the company's enterprise
Why do we
value?
keep leaving too much money or gains on the table? Maybe
Here.
those are our failures.
2000. Last time we saw
Collect this
enterprise
data.
value,
Once we have this
EBITDA
data, we need to analyze it.
valuations and price to sales
And then
valuations.
build that
was
process
2000.
around
All right, so
20 years
here's just an
ago.
example.
Now we could all
And the example
sat
was
back
fear.
and said
we want
the
to collect that
market
data.
was
And what we found is
extremely
70% of the
expensive.
time our losing trades
Unfortunately,
are a
our
result
opinion
of, and everybody else looking at the same
fear
exact
of
data
missing
point
out. FOMO.
was worthless. Okay, because the market
And
was
then the other
telling you
reason
it
is
didn't
the other
care. Part of the 70% of our losing trades
Don't
is
assume
emotionally
the market should go
we
lower because
are
valuations
scared
are
of
stretched.
losses. Don't force.
Well,
a
that's an
trade
easy one to fix.
saying the
fear of
market
missing out
should go down.
It's going to take some
And
trial
don't
and error.
short it because what you
So,
believe,
Fear of
because
missing
it doesn't
out.
matter.
And again, this is
Collectively,
just
again,
hypothetical. Let's
the
say
market
we're only talking about two
as a
reasons
whole
why
is telling you
hypothetically
it doesn't
someone
care. Is failing in their
All
investing
right.
and trading.
So in
On a
terms
stock
of FOMO,
level, maybe what
the
you
market
need to do,
doesn't care what you think.
doesn't
After
care
you
that you
discovered
think a
this is
stock
one of
is
the biggest
expensive or
reasons you're
cheap.
failing,
It's going
you need to create the
to
process that has a
move
rule
regardless
that will eliminate
of what your opinion is.
failure.
In this case, we see many different
Maybe
fundamental
you can
factors
only
or
buy if
metrics
there's a
on
specific
Tesla.
technical
The PE ratio is
event
trading at 1,000.
or fundamental catalyst
From 200
that you can answer
to 500. Maybe that will
Revenue
reduce
isn't significantly
your
increasing.
more by 50%
Why the price has more
the
than
failure
doubled.
rate in the FOMO category. The
Maybe
EBITDA,
it alleviates but 100%.
which is basically earnings,
has
Number
not
two,
significantly
emotionally
moved at all
and scared
2 to 3 quarters
of
later.
losses.
And
That's very
sales
easy. All you need to
really
do
are
is
not moving.
You're
Either
obviously
you're
looking
too
at
large
the
in your
P
position
or
size,
the price to sales ratio,
or your portfolio
it's gone
is
from
carrying
about
too much
9,
volatility.
and you need to reduce that.
Or actually about
Now,
We're not going
5
to go into specifics
to about
because
15. So
the truth is
revenue is
everyone
not significantly
has
increasing based on
a
the
different
price
risk
either.
tolerance,
But which means
we can't
everyone's
force
position size is going to
the
be
trend
very different. That is
in
up
Tesla.
for you to answer.
We don't want to
But
fight it.
Now, if you
Part
don't
of our
want to invest in it
process
because you don't like
is-
the fundamentals, that's
and
fine.
collecting this data,
I
if we're
understand that.
fearful,
But don't
of
try to fight
losses,
this trend.
we need to then
because you
reevaluate
think
the
that
process
stock
of
is
how we build a
overvalued.
portfolio and trade.
So if we're taking 5% position sizes,
if you
it's
try to
very
get
easy
in
to
the
say,
way
you know
of
what?
it,
I
you're
have
gonna
to
get
cut
run
my
over.
position size down to 20, or I'm sorry, 2%.
All right.
Or
And
2.5%.
then lastly,
and maybe if the portfolio is too
learn
volatile,
from your
we need more
failures.
diversification.
You have to
among
have
sectors
failures
if you're
because
going to
you
build
are
a better
only
process.
trading
Data
in
is
technology.
king. So number one, if that's not good
let's
enough, we have to have
look at our failures.
maybe
Collect
larger
those failures.
diversification among asset classes. Look at the data.
Because we need asset
in those-
classes that are not as
in
highly
that set
correlated
of
with each
failures.
others.
Regardless,
And then number 3,
whatever
we need to build
the
a better
issue of your
process
failing
around
trades are,
the
you need to
data,
collect
which
that
was
data
collected from the failures.
So
Process.
let's just say, hey,
and then build.
why do we keep losing
rules
money?
around why
Or
you're failing to?
why do we keep leaving too
helpfully
much money on
eliminate
our gains
those
on the
issues?
table? Maybe
So,
those are our
again,
failures.
this is a very
high level. Collect this data. Once we have this
Document
data, we
talking
need to
about
analyze
how
it
we can
and
avoid
then
making some
build that
mistakes
process around it.
All
We
right,
hope,
so here's
this
just an
helps
example.
in your process of becoming
And the example
a
is
great
fear.
investor.
We want to
and
collect
trader.
that data.
See you in
And
the
what we
next
found is 70% of the time our losing trades are a result of fear of missing out, FOMO. Okay? And then the other reason is, the other part of the 70% of our losing trades is emotionally we are scared of losses. Well, that's an easy one to fix. Fear of missing out, it's going to take some trial and error. So, fear of missing out. And again, this is just hypothetical, let's say. We're only talking about two reasons why hypothetically someone is failing in their investing and trading. So in terms of FOMO, maybe what you need to do after you've discovered this is one of the biggest reasons you're failing, you need to create the process that has a rule that will eliminate this failure. Maybe you can only buy if there's a specific technical, event, or fundamental catalyst that you can answer for. Maybe that will reduce your trades by 50% of a failure rate in the FOMO category. Maybe it alleviates but 100%. Number two, emotionally and scared of losses. That's very easy. All you need to do is, you're obviously too large in your position size, or your portfolio is carrying too much volatility and you need to reduce that. Now, we're not going to go into specifics because the truth is everyone has a different risk tolerance, which means everyone's position size is going to be very different. That is up for you to answer. But part of our process is, and collecting this data, if we're fearful of losses, we need to then reevaluate the process of how we build the portfolio and trade. So if we're taking 5% position sizes, it's very easy to say, you know what, I have to cut my position size down to 2% or 2.5%. And maybe if the portfolio is too volatile, we need more diversification amongst sectors because you are only trading in technology. Or if that's not good enough, we have to have maybe a larger diversification among asset classes because we need asset classes that are not as highly correlated with each other. Regardless, whatever the issue of your failing trades are, you need to collect that data, process it, and then build rules around why you're failing to and helpfully eliminate those issues. So again, this is a very high level document talking about how we can avoid making some mistakes, and we hope this helps in your process of becoming a great investor and trader. See you in the next video.